What's going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. This is actually take two. I'd recorded this entire video and realized that my microphone was off. It is March 8th, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to be talking about the price action and the indices. We'll go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day, and we'll wrap up with some options order flow. But before we jump in, quick risk disclaimer as always. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. All right, let's jump right in. Crazy price action today. So if we look, we had the S&P 500 closed down 0.5%. We had the NASDAQ QQQ closed down 2.83%. Huge red day for the Qs. We had the IWM finish up 0.47%. And we had the Dow Jones finish up 0.95%. Actually hit an all-time high today. So huge divergence between the Dow and the Qs. And coming into today's session, we were talking about this in the Pristine Capital pre-market webinar. Pretty much saying we need this 3830 level to hold. Today was a crazy day of price action. I'm going to bring you back all the way to the overnight trading last night, so Sunday. So we open up for trading, market's up maybe like 0.6%. So it's like, oh my gosh, this is so bullish. Let's see if it holds. Sure enough, market loses its gains overnight. And, when I wake up and see the futures this morning, I see like NASDAQ's down 1.3% or something. The SPY or S&P 500's down like close to 1%. And it looked like, okay, this could be a pretty rough day. That's a huge overnight range. Then in the morning, David Tepper comes on CNBC. And I'm not positive if this was the catalyst, but the timing kind of lined up where he pretty much said, like, I'm super bullish on stocks here. XYZ, and the market really recovered in the morning. So when we opened up for trading, it was like, oh, okay, market's actually up right now. It was up slightly. It opened up at about 38.56 on these S&P 500 futures. We auctioned all the way up to this downward trend line right here, and then we ended up falling over throughout the day. So if we look at this hourly chart, you can see there's definitely a lot of confusion that's still happening in the market. And to me, when I see this price action that's like super choppy and all these extended ranges, what that's telling me is there's definitely some institutions that their portfolios, like they're still off sides. And what I'm seeing is every time tech rallies, there's some institution that's selling into the strength. Same thing, opposite with these value stocks and cyclicals. The institutions are definitely loading up on these stocks. It's pretty clear. So we have these, dual markets going on. Looks like we're having some strength in the, in the after hours futures trading here. You can see we're at 0.41%. But let's pull up our heat map. So you can see here, as I was just saying, this tale of two markets. We had pretty decent breadth today. So we had a lot of stocks making really nice moves, especially in the morning. So depending on which areas of the market you were long, in this morning session, you were either having like an amazing day or, you could have been having a pretty dreadful day. So we had Microsoft down big, Apple, Google, Amazon, Tesla, NVIDIA, really all the names that matter. So one thing that's interesting about this heat map is every square, the bigger the square, the bigger the market cap of that company is, and the bigger the weight in the S&P 500. So if you look, Apple, huge square. Microsoft, huge square. Google, same thing. Basically, all the companies that are really under pressure right now are huge weights in the overall index. So what happened today was like these names all started really selling off. Like the selling accelerated very quickly around lunchtime. And it's very difficult for the entire market to remain bid when you have these mammoth companies like the Microsofts and Apples of the world that are under pressure. So they sort of, they sunk a lot of the other companies, and You'll see like when you look at charts tonight, there's a lot of upper wicks on stocks because the rallies are sort of sold, that sort of thing. If we take a look at our sectors, I did add some new tickers to this list. So I added the U.S. Cannabis Fund, MSOS. I added Hero, which is video games and esports. I added a couple of other ones. I added this Emerging Markets Internet and E-commerce Fund, the Autonomous, I had that one, the 3D Printing Fund, and a few others. But you can see, again, what we were talking about, this tale of two markets. It's very clear these institutions, they're still underweight these cyclical stocks, and they're still too crowded into tech. So if we look at the areas that performed really well, we had regional banks up 2.59%. We had energy up 0.19%. Retail had a really nice day. That one has GameStop in it, and GameStop, it's doing what it does and just ripping shorts apart. And then materials were really good also. The areas that were very weak, you can see the social media ETF down almost 6%. Semis down about 5.5%. And if you look, KWeb, these Chinese internet companies, down 7.72%. Solar down, 7.25% as well. So these moves, it's telling me a lot of these areas, they're just going no bid. Pretty much like, what happened was everyone got super crowded into these themes, and they were just running. And it was just, okay, we're progressively adding more tech throughout an entire year. And when that happens, you can get, what we're seeing here where it all unwinds. If we look at our style factors, you can see again, this doesn't look like markets in turmoil. This just looks like rotation. So you can see we had cyclicals up 2.25%. We had the high div, low vol up 1.95%. The areas that really struggled, momentum and growth, down 3.4% and 2.15%. The next chart I'm going to pull up here, I think this is one of the most, if not the most important chart to really be paying attention to right now. This is our growth versus value relationship right here. And you can see throughout all of 2020, growth stocks were being bid in comparison to value. I remember for a while it was like, is value dead? Like, value investors are pretty much like being made fun of. Everybody was saying like valuation doesn't matter anymore, it's outdated. And sure enough, that definitely changed, very quickly. So you can see, value stocks have made a big comeback. And this has been a very quick, very violent adjustment in the market. One thing I will say, just looking at this glass half full is, there's already been a pretty sizable rotation. But if we are going to, readjust back to where we were pre-pandemic, there's still more way to go. So you can see here we're at a 1.83 on this ratio. Maybe we get down to a 1.71. Who knows? So definitely, there could still be more to this. And I know that's tough to believe for many out there because, 2020 was such a unique market. It was such a special market. It was a market that really rewarded not being disciplined. If you're in a stock, even if you get the wrong entry point, most likely you're going to get bailed out by additional buyers. Things really just flying off the shelf. So you didn't really need to worry about, your risk, your concentration, all that stuff. Now this year, it seems like the market is going more back to like a normal market. And so like I would definitely say if you're judging how you're doing this year based on 2020, or really just judging, any future investments that you do based on how 2020 went. Like if you're expecting like, why hasn't my stock tripled? It's been a month. This is sort of how a real market works, where it's not just always, up in a straight line every day. You can see a little bit more to go here. If I also pull up the Qs versus the IWM, this is another pretty good one to look at. Let me just pull this up. Keep putting in the Q. There we go. Yeah, you can see this one. It's had a pretty big normalization already. So that's the bright side, where now it's becoming like a really popular narrative. Now it's become very obvious. So now there's a lot of people saying like, oh yeah, we need to rotate now. And luckily the rotation's already been happening. So we don't really have all that far to go in terms of completely normalizing this ratio. So we'll see. I wouldn't be surprised though if it did go, all the way down to this 1.28 level. Definitely just something to keep in mind. And then if we take a look, we'll pull up some of my trades for the day. Let's pull this up here. Yes, I did some options trading today. I took some USO puts. I got the June 18th 44 strike puts. I got short some oil, and I talked about this in our pre-market webinar. And really what I noticed was like crude has been on a bender. It's been on a really nice run. If you have been long energy, that is amazing. Hats off to you. That was an amazing trade. So really good. But what I noticed is with this crude, and it looks like we're getting a little pump here in the after hours. But crude, there was actually a geopolitical event this weekend. There was a Saudi Arabian, oil facility that was attacked. Luckily, the facility wasn't really taken out. No damage was actually done. Apparently, like the missiles were intercepted or something like that. But a lot of times when you get these geopolitical scares, you'll get a real spike in the price of oil. And what I noticed was we got a little spike, but really in the grand scheme, nothing, and it was faded very quickly. So that told me like, okay, this might be getting a little bit long in the tooth here. And when I look at this weekly chart, a lot of players really think that 2018 was the peak of the prior economic cycle. And you can see that the oil price is pretty much recovered back to where it was pre-pandemic. So, if you're playing for like a recovery in oil, we've already gotten it. We're already there. And you can see we took out this VPOC, Virgin Point of Control here at like $68 for crude. So if you're continuing, like say you're initiating long positions in oil here, maybe it works out. Maybe we hit the $75 level again. Maybe we get $100 oil again. But given the run that it's had, and the fact that it's completely normalized, this one looks interesting for just like a short term, like essentially like a scalp to the short side. So I entered those puts. Those worked out pretty well today. I still have those on the books. Let's see what else we did today. My TLT hedge that I had on the books, I closed out another third of that. I closed out the initial third last week. Closed it out for $2.27. I had paid $1.83. And another trade I closed out when the market was pretty bid today and pretty strong. One thing I want to do is try to get rid of some of these trades that really didn't work. Some growth names that I sort of got caught in with the options trades. So I closed out this Futu call butterfly expiring March 19th. I had paid $4 for that one, closed it out for $1.95. Really the idea being is like, if I can get $1.95 back, I definitely just want to reallocate that to another trade or really just reset the deck. One of the worst things that can happen, as a trader or investor is you're in these positions, you don't really believe in them anymore, and you just sort of keep them on your books, and you're looking at the position every day, and you're too scared to stop out or whatever. That's what you don't want as a trader. If something works out, great. If it doesn't, remove it. So like Futu, I was able to remove that one when it was still pretty bid. I think it was down about 2% on the day. This one ended up closing down 12.4%. So this is like the kind of market environment we're in right now is, like I said, institutions are off sides. So what that means is like they're just offloading their inventory in these names so they're too overweight. And there's not really many buyers that are coming in to, support the stocks for a lot of these. See, this one closed down 12.4%. I've seen countless stocks that are just down 10% in a day. Casual 20%, casual 15%. So yeah, for this one, I was glad I was able to get out and get at least $1.95 back. Another trade that did work out pretty well I closed the remaining half of my Disney calls. I had the April 16th 185 strike calls. I paid $11.10 for those, closed those out for $20.42. So this one was a nice win here. And Disney, this one still looks very strong. This is one that I would definitely consider re-entering or rolling the trade. The market did get a little bit weak, so that's really why I just didn't roll here. But Disney, you can see nice high volume candle, really nice breakout of the monthly value area. But really my game plan for this trade was, okay, I want to take my target when we get to this, 202 level here. So I took that off for almost a double, which was good. Then we had on the stock side, traded a couple names for my weekly watch list. I send that out to Pristine Capital members every weekend. I closed a FRX. That was a SPAC that I put on last week. Paid $10.90 for that one. Flipped it out for $11.68, just for a quick scalp. I entered some Crocs, common shares. Then I also entered some OMI. If we look at Crocs, this one very strong fundamentally. It's not incredibly overvalued in terms of, the price to earnings ratio, any of those metrics. This one was tough though. So I entered this one and it completely lost, all the steam that it had. There were a lot of candles like this where as the market softened up a little bit, especially like as these momentum names softened up a little bit, they sort of lost their gains. But this one still closed positive for the day. And I like the way that it held up during this momentum sell-off. So what this tells me is there are some institutions that are defending Crocs, and there are some players that are still finding value in buying at these levels. I have a nice stop out point here at around $73. So if it doesn't want to hold, these levels, I'll be out of Crocs, but I definitely like this pattern. OMI, this one was actually my favorite setup for my watch list. This one also, as the bid came out of the market, this one came off the highs. But this one had a really strong earnings report last week. And it also held up very well during this sell-off. So you can see it pulled back, but it found support at that 20-day simple moving average. And here, I had a nice attempt to break out. So we'll see if the market firms up. I think this one can do pretty well. So let's take a quick look. We'll check out our options order flow. Pull it up. Where is that? Okay, right over here. I didn't see as many puts as I would like, although you can see this is our large order flow. In terms of dollar amount, we had 85% put volume, 15% call volume. You can see a bunch of IWM puts came in after the bell, after the close here. Then in the morning we had some hedges, some ARK puts, Tesla. A lot of these names we always see, like there's players that are always buying the dip in Apple and Amazon. Same thing with Facebook. They keep just relentlessly buying this dip, but the dip just keeps dipping. And you can see more IWM puts. One that I thought was pretty interesting, you can see we have a Disney call player coming in at around noon. At that point, Disney had already made, most of its move. More Disney players. This one I thought was interesting, Viacom. So Viacom, they're buying these calls out to 2022. They bought the 40 strike. This one, super bullish pattern here. But for me personally, I can't buy Viacom here. 12.69%. They pretty much bought these calls when this stock was trading, towards the highs of the day. So for instance, like we're talking about how growth stocks really got hammered. They were riding so high and, then the risk hit, all at once. So like take a stock like Futu, for instance. The reason why I don't like buying these super extended is because, you can make a lot of money buying stocks that are extended. Don't get me wrong. It happens all the time. But something like Futu, look how far it got away from its key moving averages. And even those moving averages, look how far away they are from each other. That means the stock's really extended here. Imagine buying Futu here. And there were players, buying calls and Futu right on this day. Then suddenly you go like, oh, and you can get yourself in trouble. So that's really the reason why with something like Viacom, maybe this thing just goes to the moon for all I know. But this, I can't really buy. I can't get into it at this level, just because I think the odds really are not in my favor at that point. That about does it for our options order flow. Yeah, I see some Zoom players coming in as well. Let's actually see Zoom. Zoom is another one. That's what's very tough in this environment. So Zoom is an amazing company, but amazing has been priced into the stock. This one made it all the way up to 570. So really, with names like this and just in general in the market, you can't really anchor on anything. So like, has the story really changed for Zoom? No, not really. But the price has changed. So this is definitely something where, like, who knows, maybe these guys make a killing buying Zoom here. You can see back in September when it crushed earnings, yeah, we filled that gap completely. But yeah, this one, it's just in a clear downtrend. That about does it for this evening video. Hope you all had a great trading day, and I will see you all tomorrow.